Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 28th of January, 2019 at 3:24 p.m. Central Standard Time. A basic down day in the grains, but you can't get too excited. The Chinese delegation is now in town. Negotiations at a very much up level from Steve Mnuchin, Mr. Lighthizer, and the head of the Chinese, the vice chair of China, will be here. So there's a lot of heavy-duty negotiations. You saw a press conference today where Larry Kudlow was talking about it, Steve Mnuchin. We have to wait and see how this is going to play out. Stock market a down day, energy's down as we're still going to take in Venezuelan oil, even though we're only putting that money into a blocked bank account as we pay for it. Very interesting what's going on. But in looking at the grains, a basic down day today. As you can see, the weekly area chart of closes, we're still over the 18-week moving average of closes, down today 2 cents. As you look at the chart here, you can see how the market's narrowing in with what's called an inside trading day today. That means you didn't take out yesterday's, I'm talking Friday's, high or low. However, the market's had a nice run to the upside. It's got a pattern of higher lows, higher highs. That's all bullish. The market is staying over the 18-day average of closes, and frankly, as long as the market stays like this, each break to that number should offer at least some temporary support. The resistance comes in at the upper Bollinger Band, the black dashed line up here, and there's support lines down here. But the resistance right up against this 931.5 level as I see it. And momentum is overbought. So we have a market that down a little bit today, closing the top part of the day's range, getting close to resistance and spending its power getting up there. As we move to the meal market, a lower close today. It's had a pattern of lower highs, and with today's action, you actually have lower low. You have an outside day down today. I could move this arrow right here to today's high and say lower highs, lower low. It's the flip-flop of the soybeans because it's oversold. In the soybean oil market, you have a market that's 4 days in a row now over the upper Bollinger Band. Tomorrow could be the 5th. 5% of the time the market spends over an upper Bollinger Band or below it. Only 5% of the time. When you get consecutive days over it, I count each consecutive day as one of those percentage points as my rule of thumb. So I give tomorrow a 1% chance of being over that upper Bollinger Band. In other words, I'm looking for a pullback. Support in the market looks pretty strong at the 18 and the 100-day average of closes. Plus, you had a bullish crossover where the 18 today got over that 100. So still good action here. In the corn market, we've got a market that keeps fighting at the 18-day average of closes. Look at how often this is taking place. You've had a pattern of lower highs, lower lows, but basically the market's tried to close over the 18-day average as often as it can. It just keeps the market neutral. In the wheat market, you broke through 316.5, but you had no follow-through. And in fact, by the end of the day, those that sold down there, they found themselves caught back because the market traded and stayed over the 18-day average of closes. Look for resistance at the 100-day in the upper Bollinger Band, the black line. Support down here. Right now, the market's out of step. You have a pattern of lower highs, lower lows, but you closed over the 18-day average, so the bias is up, and momentum is correcting to the downside. In the sugar market, we spent 2 days fighting between the 100 and 18-day average of closes. Similar to what we just looked at here in the wheat, we have the pattern of lower highs, lower lows, but you're closing over the 18-day average, gives the bias up, and momentum is pointing down. In the coffee market, once you slice through 102.30 today, it was ball game over. What you had last week is you had a move to challenge the upper Bollinger Band again, like you did here and here. You got up, failed on Friday, fell through that low today. You're just caught in the middle of no man's land here. There's no trend and you're caught in between the upper and lower Bollinger Bands with momentum pointing down. In the cocoa market, I think the downtrend ended today. You've had a pretty clear pattern of lower highs, lower lows. The market started fighting at the 100-day average a week ago, got itself oversold. Today it popped over this number. So now I have the lower low, higher high. I'm out of the downtrend, not in an uptrend, middle of no man's land. In the cotton market, the market is just drifting sideways. Do you see the black Bollinger Bands, how the market's just moving sideways in them? You can see them right here. That's like a coffee market, if you think about it. Spinning, wasting power, trying to figure out the next move. In the cattle market, we're still in an uptrend. Now, it's interesting, this cold weather that's coming through, because cattle movement isn't going to happen. I can tell you already that in our office, most of our staff will not be here Wednesday. They may not be here Thursday. We're talking in the city of Chicago. We're supposed to get down to 50 below zero in the wind chills. Without the wind chills, maybe as low as 24 to 28 degrees, setting new all-time records without a wind chill for cold. And our high, it's going to be below zero. So you're not going to get people out. It's a little too dangerous. You get frostbite in under 10 minutes. We live on the lake. If you get any type of serious wind, God knows where that goes. So you got to be cautious. So just expect that. And it's not just Chicago. It's the whole Midwest that's getting in. The airports are seeing massive delays hitting them at both Midway and O'Hare. So that's just Chicago. What are you going to do in the other parts is the storms right now coming through. We have higher lows, higher highs, and uptrend that is a bit overbought in the market. If it continues, maybe the upper Bollinger Band. In the feeder cattle, should the market get over 144.87, that would negate the downtrend in terms of the lower highs, lower lows. The market did close over the 18-day average, so it turned the bias up. You've gone into no man's land in this market. I don't know if it's weather-related or quite what it is. And in the hog market, you tried to snap back today. You closed at 62.32.5, just under the lower Bollinger Band, which gives you, I think, 3 days in a row or 4 days in a row under it. You're stretched out in that. So as you know, you heard what I've already warned you. Well, how do you keep up with the market if you're not around the office or so on? If you're an ag trader, you might want to take a look at our QT Market Center with our streaming quotes. You get different screens you can look at. You can change the view of the screens. News throughout the day. If you're an ag trader, a lot of ag news comes through this. How do you get all this? Because it is free to you. Just give us a call, go to our website, we'll give you the user ID and password, and then you go to your Google Play Store, your Apple Store, and away you go. Just download it and put in the passcodes, and away you go from there. By the way, all my videos play on that, so you might want to take a look at it. I'm Ira Epstein. Have a good day.